Hello guys, welcome back to another exciting moment with RALLYTOP Investing 3.0 SMC Masterclass. Now, if you are the type of trader that is interested in buying and selling signals, or you want to get multiple strategies with which to engage the market, you can as well just click away right now. But if you are the type of trader that wants to actually learn and discover the mistakes you have been making in the market, and you are willing to improve on it so that you can become a better trader for it, then you can stick with me to the end of this video, because this video is all about teaching you and showing you what exactly you have been doing wrong in the market that has been draining your hard-earned money. So we are going to be switching between two time frames. I'm going to be using the 1H as well as the 4H. I'm not talking about going down to lower time frames. I'm just going to be using the 1H as my entry time frame, and the 4H will be interchanging. That's all. This is going to give you an opportunity to see where you have been making mistakes in the market and you need to correct them. Now, let's get started. This is XAU/USD 1H time frame. If you want to go with me with your chart, you want to follow me with your chart, you can open your chart to XAU/USD 1H time frame. I'm looking at around 22nd of April 2025. Now, if you are the type of trader that focuses only on one higher time frame, for example, like the 1H now, you want to focus on the 1H as your higher time frame and then the 5M as your entry time frame, irrespective of what a time frame higher than the 1H is doing. You just want to concentrate on the 1H. Well, what you are going to see in this video may as well be happening to you. Okay? You need to understand that the higher time frame trumps the lower time frame, and therefore when you are looking at the 1H as your higher time frame, once in a while you need to switch over to the 4H and see what is going on the 4H. That's how to trade. Now, this is 1H. Now, you know that our methodology is such that if liquidity is not taken, we are not interested in engaging with the market. So here, the market is pretty much bullish, and it has printed this high. But for this high to be confirmed, we will actually need liquidity to be taken in the form of inducement. And here is that liquidity. Once that liquidity has been taken, this high will be confirmed. So we can actually advance price to see what goes on in the market. So as you can see, the inducement has been taken now on the 1H time frame. After your inducement, then your high can now be confirmed. So we have a swing high there. Now that you have a swing high, where is your swing low? Well, we have to go backward to identify our swing low. Remember, you need to establish your trading range before you do anything on the chart. Now, take a look at this high. For this high to be confirmed as a valid high, it needs inducement. And so where is the inducement? Well, the inducement is right here. If you don't know how we determine our inducement, you can go back to our playlist. We have multiple videos there that talk about inducement. So that low, that liquidity in the form of inducement is taken out, and now our high cannot be confirmed. So now our high is confirmed. Now the higher low in a bullish structure will not be confirmed until price takes out this major structure high and close above it. And as you can see, that happened there. So meaning that this becomes our swing low. So what we have in the market right now is that we have a trading range. This is our swing high and this is our swing low. This is important for you to understand. Now we have identified our trading range. We can as well now begin to identify our areas of interest. In a bullish structure, you want to start marking out your areas of interest from this low. The first area of interest is this. Remember, I have always been saying that you need to focus first of all on the order flow. Now the order flow is primary and the order block is secondary. So this is your order flow. Now, but this order flow is too large. you can actually refine this order flow if you so wish. And if you want to refine it, you just refine it to this other one here. Even though we have another order flow just we have another order flow just here, but let's just concentrate with this one now. Okay, so this is the refinement of that order flow. That's the first one, and this is the extreme area of interest. Now let's look at the decisional area of interest. This can be said to be our decisional area of interest, but I think this candle slow is lower than this previous candle slow, so meaning that this has been mitigated, so we cannot use that, and therefore we move to this next one. And as you can see, that also has been mitigated, so we cannot use that as well. And then the next one is this one here. This one is right there where our inducement is, and it's already mitigated, so we cannot use that either. So the only one we have here is this extreme area of interest here. Now if you want to use your OB within your order flow, this will become your OB, and as you can see, it's already mitigated by that candle, so we cannot use that as well. And where is the next one that we can use? Well, we can use this OB here. Can we actually use this OB? Yes, we can use this one here. And let's see, that also has been mitigated already before this inducement plays out. So the only one we have is this one here. So I don't want the video to be too long, so we'll be moving faster. I just want to show you what you have been doing wrong in the market. Now, so we have identified our swing high, swing low, and then our trading range. Then we have our area of interest here. The extreme area of interest is always high probability compared to the decisional area of interest. So everything is aligned. Let's continue to advance price. Okay, so price has come into that extreme area of interest. Let's see what's going to happen, whether it's going to hold price. Now remember, this is our swing low. This is our area of invalidation. Okay, so now let's see if price is going to hold. But remember, if it takes out this low, this line, which is our point of invalidation, that's this low here. If it takes it out, that means that this uptrend is over. We are now bearish. All right, so let's continue to advance price. Look at what has happened there now. This point of invalidation has been taken out. So our extreme area of interest did not hold price, and price had closed below this point of invalidation, meaning that we are now bearish on the 1H time frame. Now ask yourself, why did this happen? Why is it that this move happened here that took us out of the market? After all, we have done our analysis on the 1H carefully. We have identified our swing high, our swing low, and then inducement has been taken out, and then this is the extreme area of interest. So what went wrong? Well, this is lesson number one you need to learn. What went wrong is until we get to the H4 time frame. So I'm going to take you to the H4 time frame now and show you what went wrong, that you have been doing wrong in the market. So this is the H4 time frame now. I want you to look at this carefully. For us on the H4 to validate this high, we need inducement. Will you say this is the 4H inducement? Please look at it carefully and let me know what you think. Leave it in the comment section. Is this inducement? This certainly is not an inducement for the 4H time frame to confirm this high. This is inducement for the 1H time frame. So where is the inducement for the 4H time frame in order to validate this high? Well, the inducement is right here, guys. This is the last pullback before this higher high here. Okay, so there is no pullback here within this leg, only here. So this low that we marked on the H1 as our point of invalidation, meaning that if price takes it out and closes below, it becomes a chalk on the 1H. But on the 4H, this is an inducement. Now, understand that inducement is a form of liquidity. Any area of interest, whether order flow, order block, or whatever you are using as your area of interest that is sitting on liquidity will fail. 80 to 90% of the time it will fail. Okay, and so that's why this area of interest has failed, and that is why price has taken out this liquidity on the 4H, whereas on the 1H is telling you that this point is chalk. Okay, meaning that we are now bearish on the 1H. But take a look at the 4H. Are we actually bearish here? No, we are not bearish on the 4H. We are bullish, as you can see. That's the first lesson you need to learn. Now let's get back to the 1H, and then you will learn some more. So now price has taken out this very low. It has been converted to bearish structure now. Let's take out this area of interest now. So if it is a bearish structure, then we need to identify our inducement before we can take any trade. So right now, this is the inducement. We want to see whether price will go back up to take out this inducement. Then after taking out that inducement, we can now identify our areas of interest to go short. So let's continue to advance price. As you can see, that inducement has been taken out, and therefore we can now mark our areas of interest. We want to start from the high here to mark our areas of interest. That's our order flow. And then the next one is this one here. This is the next order flow. But this order flow, look at it, it's been mitigated already by this pullback, so we cannot actually use it. So, but we have only one order flow. Now, since this order flow has been mitigated already, can we now look at the OB within this order flow here? Because your OB is secondary, your order flow is primary. And then the OB we have here is this one here, guys. So let's see what happens. These are the two areas of interest we have on the 1H time frame to go short. Now, price is already inside of this decisional area of interest. Remember, decisional area of interest is low probability. This is higher probability than this one. If this is going to hold, we want to wait for a candle pattern that will help us to go short. That is, if we find a bearish candle that takes out the high of this previous candle, let's continue to advance price and see. So as you can see, this is an inside bar, so we cannot really take trade here because this is inside bar. Let's continue. Okay, now price has taken out this low, so we can actually frame our trade here to go short. Our TP just there. Okay. And so that's our trade. Let's see how that goes. So we are still in the trade. Okay, so price has hit our TP, which is fine, completely fine. Now, let's look at what happened here. This is our break of structure right here. That's a valid break of structure. Now that price has broken the structure on the 1H, so for us to go short, inducement has to be taken out, and here is your inducement in the market. So let's advance price and see. Okay, so it didn't take out that inducement. It created a new inducement in place. So this is our new inducement. So let's see what happens. And again, there is another inducement now here. Look at this. I want us to follow it step by step so that I can show you some more things that you do wrong in the market. Okay, now price has taken out that inducement, so we can mark our areas of interest. Now let's start from the high. Where is our highest high here? Remember, the highest high was here. This is our trading range. Let's confirm our trading range first of all. This is our range high. Okay, so our range low has now been confirmed. This is our range low. So range high, range low. So let's mark our areas of interest now. Now, if we start from this high, this becomes the first area of interest, which already has been mitigated. No, has been mitigated here. So we cannot use that one. So we take it out. The next one is this one here. This one has been mitigated, as you can see by this. So we cannot use that either. So let's look at the next one. There is no one again. There is no one. There is no one because from here, look at this one, mitigated by this pullback. Okay, so it is this pullback now we want to see if we have anything here. This one has been mitigated by this one, so we cannot use it. And so the final one is this one here. This one here. So that becomes our zone that we want to take trade from. All right, remember, this is our point of invalidation. If price comes to take it out and closes above it, that means it's a change of character from this bearish structure back to bullish structure. Okay, now everything has been set. Range high, range low. This is our area of, this is our zone to play with, and we have marked our area of interest here. Now let's get one more area of interest in the form of OB. So where do we have the OB? This OB here, all have been mitigated. All right, everything is mitigated, so there is no one there, so we can continue to advance price. Okay, so price has come into this our zone right now and has given us a clean candle pattern to go short, as you can see right here, a clean one. So we can as well enter our trade on this candle. Immediately this candle closes, we enter our trade to go short. So stop loss just above, give a buffer, and our TP below here. This is our external liquidity, and that's pretty much it. Okay, so let's see what will happen if it's going our way. Can you see what is happening? Price came close to hitting our TP but went back up into that same zone and created another structure here. Look at this fine candle pattern here. So we can take our second position here if we so desire. We can actually take a second position here to go short. TP just above, and our TP the same external liquidity. So that becomes our second trade. So let's continue. Can you see what is happening? It took us out completely. Let's continue to see whether it will wick above this major structure high, and then we can take price lower. But if it breaks and closes above it, then we have been converted again to bullish structure. So let's continue. Can you see? It took it out clearly, meaning that this is a chalk now. All right, why is this happening in the market, guys? Think about it. Why is it happening? The first time we're taking out, we did all our analysis on the 1H. All right, nothing left to be done on the 1H. Again, we have done our analysis here, range high, range low. we have marked our area of interest. And look at it. It took our area of interest, went ahead to take out this external liquidity here and close above it. What happened? Let's get back to the 4H and let me show you what happened. Now, take a look at this. Look, we said that this is our inducement on the 4H to confirm this high. Okay? To confirm this high. That was our inducement. Now, after this inducement was taken out, price pulled higher to create this high. It didn't take out any inducement, it just pulled back and then came back down to take out this low here. All right? Took out the low here. Can you see that? After taking out that low, we need inducement for this low to be confirmed. And where is the inducement? Of course, your inducement is right here on top here, where you marked as your major swing high on the 1H time frame. It's actually 4H inducement. Let's analyze the 4H first so that you can know what I'm talking about. For this high to be confirmed on the 4H, inducement is needed. So inducement was taken out. So our high has been confirmed. So this is our swing high in the market. On the 4H, this one is the swing high. So if this is the swing high, where is our swing low? We need to go backward to identify our swing low. Now, let's look at this. Take a look at this high. This high, to be confirmed as a major structure high, it has to take out liquidity. Liquidity has to be taken. And here is that liquidity taken. And therefore, once liquidity has been taken, then our high is confirmed. This high is now confirmed. Now, remember, for our higher low to be confirmed, price has to close above this major structure high. And as you can see, that happened somewhere there. And therefore, this becomes our low in the market. Look at it. This is our low. Now, this is our trading range. Let me show that to you quickly. Look at range high, range low. Range high, range low. Whereas, this is bullish structure, clear bullish structure. Whereas, on the 1H time frame, it shows to you that we are bearish. We're not bearish. We are bullish on the H4. But the 1H is showing bearishness. Can you see that? So many things wrong on the 1H. I've told you, look at the two things here. One, this point we marked on the 1H as our swing high is actually 4H inducement. And secondly, what you find on the 1H as being bearish structure is not bearish. It is actually bullish on the 4H. Can you see that? And the higher time frame will trump the lower time frame. So this is inducement. And therefore, we are expecting price, because let's mark our areas of interest. After we have identified our trading range, this is 4H inducement. Where are our areas of interest? Let's start from the low here to mark our areas of interest. The first area of interest is right here. Right here. This is our first area of interest. As you can see, nothing is yet to be mitigated. So this is our first area of interest, which is our extreme. Now, where is our decisional area of interest? Well, our decisional area of interest can be said to be this one here. This one is our decisional area of interest. Can you see that? So these are the two areas of interest. Is it? Yes. These are the two areas of interest, because this one is our inducement. So we cannot mark this as a zone, an entry zone, because it's before this inducement. Okay? So this is our decisional area of interest, and our extreme area of interest is right here. Okay? So if price is coming back down, this decisional area of interest held price here. It pushed price to go up. And if price is going up, where do you think is going to be our chalk? This is not going to be the chalk. This is not the chalk. This is the chalk, guys. If it's going to go up, this will be a change of character. So, but as it is now, price is yet to close above. Until price closes above, we cannot do anything. We cannot do anything. Okay, so let's see what is going on. So price has closed above. Now if price has closed above, meaning that this is short, let's see if this zone is going to hold price. So if price is going to go higher after taking out this chalk, remember this area of interest is 50-50, it's low probability. If it's going to go higher, we're expecting price to do something like this for us to be sure that price is going to go higher, because if it does something like this, then it will give us inducement for us to tap into something and go higher. But if price doesn't do that and instead does something like this, that shows that this zone is not going to hold price. So let's continue to advance price and see what happens. So as you can see, instead of price to go higher, price is trying to do something like this, like I said to you. Look at this. From this high, price printed a low here and went higher and dropped again. That shows to us that price is not ready to go higher. Okay, meaning that this zone may not hold price. So let's continue to advance price and see. So let me go to the daily time frame to make it faster. Okay, so it will be faster. Okay, so price, now remember this is engineered liquidity on the 4H that is here. This is engineered liquidity. Okay, so price has not come to our zone. Let's see whether it will come to our zone. Okay, it's not coming. So price is actually ranging. It's not coming to our zone. But you understand the drift. Let's go back to that 4H. These are the things you do wrong on your time frames. So what I would like you to do, my advice to you is that always make sure that you switch between time frames to know exactly what is going on, and then you'll be able to understand better. Okay, this is where we are going to draw the curtain. Please watch the video again and again, and then it will help you tremendously to stay out of bad trades. All right, guys, if you are new to our channel, please don't consider giving us your subscription and turn on the notification so that when we post an update, you'll be notified about it. And if you haven't joined our free Telegram channel, please do so just immediately. I will leave all the links in the description. And if you also want to become a better trader, you can join our VIP community. All right, guys, I see you in our next episode. Thanks for watching.